Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of RUA Gold, a company focused on maximizing the asset potential of their two highly prospective, high-grade gold projects in New Zealand. It's Robert Eckford. Great to have you on the show.
Lovely to be back, Jesse. It's been a while.
It has been a while, so I want to start with a wider view of the gold sector and ask what you are currently watching when it comes to the catalyst driving the gold sector at present and how you see gold performing up ahead.
Yeah, we just had a little preamble just to sort of lead into this, and we had that comment, which is actually so real that I see. We used to look at geopolitics and the macroeconomic landscape of the world to sort of talk about gold, and I think now more than ever, the geopolitics side of things probably makes up about 10% of where I see gold going. Everything is all about the economy right now and the macro factors, and everywhere you look, it's deficits. And so when I say deficits, it's governments printing money, it's that side of thing, and it's just not slowing down. So to sort of see where it's going and does the gold market keep going at these levels, these 30% rises? I mean, that's not normal for gold. But I like to flip it on its head and say, let's think about gold price as a fixed value and then think about printing money as devaluing currency, because that's actually what's happening. Everyone will see the memes out there that say, if you had a bar of gold in 1920, you can buy a house. And if you had a bar of gold today, you can still buy the same equivalent house. I mean, that's never been truer. And really what that's trying to say, and it doesn't put it into the context like this, but the value of currency is going down. And so, yeah, gold's not meant to go up 30% every year, and it probably will. But the reason is the deficits just keep getting bigger. And we've just seen last week, Elon Musk is out of the US politics, and love him or hate him. I mean, Elon Musk has pulled so many rabbits out the hat when it comes to business. He reduced his target of reduced spending in US from 2 trillion to 150 billion. He couldn't stop the bleed from the government. Then you've got this one big, beautiful bill, which I think in true Trump fashion is a real headline grabber. All this to say, and I don't want to harp on about it, but really deficits are just going to be around. They're going to be around longer. The US doesn't have any solution for this debt crisis they're in. And now everyone's flocking to gold because everyone's seeing the currency devaluation. Central banks are buying gold in bigger quantities than ever before. And so, yeah, I see gold as continuing this upward trend because there's nowhere else to go.
Yeah, I would like to continue along that thread because obviously one of the main cases to be made for owning gold, as you laid out, is the debt and deficit situation. I don't think anybody was that surprised that Doge was unable to make any meaningful impact. It was a gargantuan task. There was a lot of talk, but obviously when it came time for action, the reality was far different from what was intended. We've also seen Trump propose raising the military budget for 2026 by 13% to over 1 trillion. The Treasury needs to refinance 9 trillion and issue 2.5 trillion in new debt this year. I want to read something you wrote recently on LinkedIn. You said, over time, the price of gold has tracked US national debt almost perfectly. As debt rises, so does gold. It's why new all-time highs feel less like speculation and more like inevitability, and why pullbacks are likely to be short-lived. Walk us through what you're seeing there. Obviously, you touched on some of it, but how does this whole debt and deficit situation come to a close? I mean, obviously, we've heard a lot of talk about a monetary reset, a potential complete collapse of the economy. There's different people who sometimes can be pretty catastrophic with their predictions. How do you see all of that resolving itself, and how will gold play a role?
Yeah, I mean, I'll start with, I'm a bit of a macro nerd. So if anyone follows me on LinkedIn, you're going to see I love getting into these topics and I love analyzing commodities. I've done nothing but mining for my whole life. So I'm definitely not an economist, but at the same time, gold and the economy are so closely intertwined. And so I'll caveat everything with saying I'm sure there's much smarter people in the US that are thinking about this over me. But at the end of the day, it's only the last 50 years we're talking about where gold has actually been disconnected from currency, and that was obviously Nixon in 71, and we've only seen since then a continual devaluation of the dollar, and that's what that post was all about. Is devaluation of the dollar while gold stays steady, and that's really what we've seen ever since that disconnect. How do we solve that? Well, I mean, there's a couple of things that are interesting that are going on right now. You've got Basel III, which was, just for any of your listeners that don't know Basel III, that was the additional sets of rules that got put on the banking sector after the GFC. They've essentially made the move to call gold from a tier 3 asset up to a tier 1 asset, which means banks can now lend more money based on the amount of gold they have in their portfolio, which might actually explain why the US buying gold has been at all-time highs for the last 6 months. And so that's probably the first step the US has made since 71 in some sort of form of gold-backed currency. And we've been talking about gold-backed currencies for 5 years or so now. I mean, people have been talking about it longer. That's when I started sort of really looking at it. And that is the step number one. I mean, the BRICS are out there talking about a gold-backed type currency. China, just last week, I believe it was JP Morgan, or there was a group last week that essentially came out saying that China, they think, has about 10 times the amount of gold that they're actually reporting in their reserves. So there's all these sort of predicators of what's going to happen. Is there going to be a gold-backed currency? I'm not going to claim to know the solution. I don't think any of us do. But the one thing I see, and maybe this is into the world of tariffs now without getting all political, the one thing I see Trump trying to do potentially is cause more inflation in the US. And you can do that through tariffs and raising the price of everything. With a bit of inflation, suddenly that debt becomes more manageable because the cost of everything catches up to the debt. And so there's definitely, I think, some backhanded moves and some underplaying in really what the headlines are of put tariffs on everyone. And really, I think everything is actually centered around how do we control this debt and how do we let the rest of the dollar value catch up to this unruly debt that we can't keep. Because if you inflate the rest of the economy, suddenly your debt can become more manageable. But again, everyone's money is now just worth less in real terms.
Yeah, gold being reintroduced into the monetary system has been a hot topic over the past several years. It circled around the BRICS nations initially over the past few years. You know, there was a lot of rumors that they were going to announce a gold-backed currency at some point. That did not come to fruition yet. Things have now pivoted to the US, where we're hearing talk of gold-backed bonds, a revaluation of gold on the Fed's balance sheet. Is this mostly noise, or do you think it's something worth paying attention to as an investor in the gold space?
No, I think it's definitely worth paying attention to. And you brought up the great statistics before. I think it was, you said $2.5 trillion in debt to be essentially issued and refinanced in the next 12 months.
Yeah, it was 9 trillion needs to be refinanced and 2.5 trillion in new debt.
Correct. Yeah. And so now what do we do? When we heard last week that there was the sale of US treasuries, 20-year US treasuries, and they couldn't actually find buyers, and the government had to step in. And so if you're trying to sell US dollars, no one believes that the US dollar is going to be as strong as it is in 20 years' time, let alone is it even going to be the world reserve currency anymore. And so if you can't sell it, then what do? You really have to find an asset to back it, and gold is the only choice out there. Unless Trump comes up with his Trump coin, maybe.
Right. Yeah, I don't know if Trump's meme coin is going to be the next reserve currency. That's a whole other discussion, my God. Well, I want to talk about the mining sector for a moment. Gold miners, you know, a lot of people have been pointing out, it's been a big topic of conversation since gold has been on the run that it has, that the miners have not kept pace. Traditionally, in a gold bull market, we see greater outperformance from the mining sector. This seems to be reversing. We've seen the GDX outperform gold so far this year, and the GDXJ even more so. What are your thoughts right now on the current health of the gold mining sector? Do you still think it's undervalued at these levels?
Yeah, completely. I think you're right. It has flipped, and I actually just put out a post this morning on my LinkedIn. Like the gold is up 40% this year, and then sorry, in the last year, and then you've got the GDXJ and GDX really following along. So it doesn't seem like a bull type. They're all moving up together. But I've been working in the industry now in gold specifically for close to 15 years now, and when you add $1 of gold price, that's not adding $1 of it's not adding $1 of valuation to the company. It's actually torqued because it adds $1 to the very bottom line. Your costs, what we're seeing now, and what's not being reflected is the dollar has run. I mean, the gold price has run up, but the actual cost of mining isn't running up as fast as the gold price is. So margins are bigger than ever, and mining companies will be and continually to be holding more and more cash than they ever have in history. And that didn't happen in the last cycles. And I think investors have really good memory. They remember that run from 2000 to 2011, the mania that was out there, and everything was going up. And mining companies, to their defense, did get reckless. They didn't allocate capital well. It wasn't seen. There was huge impairments as soon as the cycle turned, and and so everyone is a lot more wary of jumping back into that mania. And so we're seeing a lot slower uptake of the inflows into gold. But in saying that, we are seeing inflows, and I personally am getting more calls from family offices and institutions that aren't historically gold bugs or gold investors, but they want to have a gold sector of their portfolio, and they want to allocate 20% of their portfolio into gold, and their tech stocks are coming off, and they're doing a bit of a rebalance and rethink. And again, especially in light of all the stuff we've talked about at the start, they're really worried about holding currency, and so we are seeing an increased interest. I think it's already flipped. Maybe it's already flipped, but really we'll know in the next 12 months, because we've really only had 1 or 2 quarters of solid gold prices with companies really building cash on their balance sheet. And I think you've got two types of producing mining companies. You've got the producers like your Agnicos and your Barricks, your majors. I think they've got every right in their portfolio to really be dividend paying stocks. They've got a mature portfolio, they've got a mature business, and they're going out and they're giving back to their shareholders. I think it's actually on the mid tiers and the growth companies that you're really investors are going into, because they want growth in the gold sector. They want growth in their gold portfolio. I think they need to really have a hard look at themselves, and they're not dividend paying stocks. People aren't investing in them for dividends. They should be out there trying to find the accretive growth opportunities. They're small enough to be entrepreneurial, and they should be entrepreneurial, because even as a mid tier, you're still small in the global realm of the economy, and they should be out there looking for the investment into juniors and the investment into development companies. And funnily enough, I think arguably, and I don't think many people will argue, Agnico Eagle is always front and center. I mean, they're the best allocators of capital, and they always talk about everything on a per share basis whenever they're doing an investment or wherever they're talking to their shareholders. They want to make accretive decisions on a per share basis, and they're the smart ones that are actually taking little 9.9 stakes in exploration companies around the world. They recently went into collective mining in Colombia, and Agnico don't have a footprint in Colombia, but they're looking for footholds to get into their growth. And that is the most accretive way for the companies to flow. And so the way, and I'm taking a bit of a long-winded approach here, I think institutions and sort of generalist investment will go into the majors, and it will continue go there first. But I think the majors sitting on walls of cash will start deploying investments into developers and explorers, and that could actually be the new way to see fund flows. I think that may be the future of a lot more corporate investment into the juniors to build out their own pipelines, because they're not getting any more ounces. They've got depleting reserves, grades are going down, and they need to replenish them.
Well, I think that's a great segue into discussing RUA Gold. It's been a while since I last had you on. lot of new subscribers since then. Maybe you could start by giving us an overview of the company and also touching on the jurisdiction a little bit, because New Zealand is not a country that we often hear mining projects or exploration development projects in when it comes to the gold space and really any commodity. I mean, very uncommon. So why New Zealand?
Yeah, no, and just for anyone that hasn't heard the story, I know you've had a huge success and you've got a huge subscriber base now. So congrats to you. But for the newbies out there, RUA Gold is a gold exploration company completely focused on New Zealand and really focused on high grade gold. Again, I've been around long enough to know the finance side of the business. I'm a CFO background, and high grade is really what we're focused on, because that's where huge margins come from. That's where the best economics are, and it all then gets reflected in the equity price. And so we've been down in New Zealand. We were private for a period, and over 5 years, we accumulated these really beautiful tenements down in New Zealand. And we are now public for the last, call it 15 months, and we've had really good success when we came to the market. I think because New Zealand, there is so little known about New Zealand. It's not a known mining destination, and to me, it's actually the best mining jurisdiction in the world. I mean, I think jurisdiction is one of the key parts for this story and for mining. I mean, you can't move an ore body, and if you've got your gold sitting in Mali right now, I wouldn't be flying there, because they're locking up executives and they're ransoming mining companies. But on the other hand, I was in the DRC before I came to Canada, and the DRC was a no-go zone 20 years ago. I lived there for a couple of years, and I was there during the turnaround. It was transformative. I mean, they went from a 15,000 ton per day copper producer in 2009, and then now today they're 250,000 tons a day. They're a behemoth, and that's what made companies. So you've got an opportunity now in New Zealand where we're focused, where it's having that same turnaround zone. It was historically a tough place to get permits and move mining projects forward. The average time was actually on par with Canada and the US, where you're sitting on a project for 10, 15 years. But that's all changed. And it all changed at the end of 2023 as New Zealand hit recession, as all the young people were leaving and going to work on the mines that were booming in Australia. And the government saw a real problem there. And they said, we really need to reinvest and push our own industry. And mining is one of the best vehicles for that. You've got the resource minister standing up in Parliament and shouting, we need to take advantage of the veins of wealth in New Zealand. And he's talking about the gold veins in the South Island of New Zealand, where we're operating. So you've got now a government really pushing for more mining. And they were leading the charge when all these countries around the world are now talking about fast tracking permitting and having sort of select projects that get prioritization. New Zealand was about 18 months ahead of the rest of the world. And so they've already got passed into law a law called the fast track permitting process, whereby you can get a mine permitted in 6 months. And New Zealand has that ability to do that because, one, it's a little country of 5 million people, and it's very much controlled federally. There's no federal to state sort of competition like you see amongst the provinces here in Canada or down in the States, where you've got your state versus federal governments. So very easy to put that change in, and it's actually enacted now. So we're seeing gold mining projects from Oceana Gold in that 6-month fast track process because they brought out a PFS already. They're ready to go. They submitted their documents in February, and one of the projects that we're right next to is in that fast track process, could be permitted by August. And so it's unreal, and it's in action. New Zealand's also put out a critical minerals list and included gold on that critical minerals list, which I think so many gold bugs out there will say gold should be on everyone's critical minerals list. But again, New Zealand has the foresight. And so it is an unknown destination, but that's the investment opportunity. And that's why we went there, is because there's a huge opportunity to start a mine in a very short-term fashion and get it into production. And that's what our mission at RUA Gold is. We're not your average explorationists. We've built 8 mines across our management and board, and we've put them into production. We've raised $2 billion of capital, and we've had $11 billion of exits. So we're not newbies here. We've been around and we know what we're doing and we're focused and we're just at the start. So it's an exciting time. It's a lot's happened in the last 12 months in terms of drilling and M&A. And so we're here for it as a growth story and looking to move this as quickly as possible.
Well, let's talk about some drill results because you recently released initial drill results from your Cumberland project. Can you walk us through the details and the next steps for that property?
Yeah, Cumberland is an interesting one. And so we're talking now, we're on the South Island of New Zealand. We're in the Reefton Goldfield. And Reefton is a town called Reef Town because it was a whole historic mining town where they went and found all these gold reefs and aptly named it Reefton. And so we're in a past producing gold area of New Zealand. It's orogenic, high grade gold. Think about the Red Lake region that made Goldcorp what it was. Think about Fosterville, the exact same geology as a Fosterville or a Southern Cross. So you've got these high grade veins that we're following. And Cumberland is one of those high grade veins. It's less than a kilometer away from Oceanic Gold's old open pit, Globe Progress, that used to be operating. 1 million ounces came out of that. And there's historic drill holes that had a 20 meters of quartz pulled out, averaging a grade of 60 grams a ton. I mean, it was heavily outweighed because there was 1 meter of 1,911 grams a ton. So that skewed the overall result. But we're talking really high grade gold that we're chasing. And this is all near surface. So the results we put out were the first 2 holes we put into Cumberland. And thanks to our friends at Verify AI, with their product Dora, that helps us in our drill targeting and where to focus, they actually, the first 2 drill holes, both intercepted. And so we had 14 meters of 3.5 grams, including a meter of 27 grams a ton, and then another 3 meters of around 6 grams with an intercept of 16 grams a ton in a meter of it. So we've got this halo of lower grade, still very decent grade, considering the average gold grade being produced right now is at 1 gram a ton. And you've got this really high grade vein in the middle. And so we're seeing really exciting things out of Cumberland. We're 65 meters deep on these holes. So we're not talking about kilometers of development to get to the ore. You're going straight from surface. So it's really exciting to get these high grade hits, to get them so close to surface. And again, you can do the gram times ton calculations and say it's around 50 grams a ton, which doesn't knock your socks off. But for me as a developer, for me thinking about how do we put this into a mine, when you're doing that from surface, you take out any capex of comparable projects. It's an unreal start to the drill campaign, which is literally just starting.
I didn't have this question prepared, but I have to follow up there because you mentioned using AI in your drill program. This is obviously something that more companies are starting to do. Could you walk us through how you came to that decision and how AI has allowed you to enhance your drill programs?
Sure, and I think to all your viewers, everyone should always put a bit of skepticism when you first hear AI, because there is a lot of talk around it, a lot of we'd say in New Zealand, a lot of flutter around AI products everywhere. And so the way we came about it is essentially we had our project in the Reefton district, and it was about 40% of the district that we held tenements of. And as I said, we had them for 5 years. We really knew what we were looking at. We knew exactly what we wanted to focus on. But then last year we had this opportunity to partner with Siren Gold, and we bought their assets that were neighboring us in Reefton. And suddenly we controlled 95% of the district. We had 125,000 hectares down there. It's a huge land package. It's like the size of Hong Kong. And so we had a lot of targets, and we got all of their data, and they'd been around for 6 years doing a great surface work and great drill programs. And so suddenly we had this data glut. And at the same time, we were watching success over the water at Southern Cross Gold, an Australian company that had exact same geology as us. It's a gold antimony style deposit, and the South Island of New Zealand and the Victoria, Bendigo, Ballarat region is analogues in terms of geology. And they were using this Verify AI product and had some success with it. And so we had two things that we needed to solve. We had copious amounts of data across the entire district that we needed to process and put into our modeling. And two, we had a huge number of targets. And so we needed to rank them and work out which ones do we chase first. And if our neighbor across the way with the exact same geology was having success using this product, why don't we give it a go? And so it did those things for us. It allowed us to put all that data into the Verify AI software. It allowed us to run iterative models on what the geology was doing, what the structure was doing. You can then put in your geothermal, and then you can put in your soil samples and really understand what's going on. And then you can take some data away and ask it to run an iteration on it and see if it actually matches up to what your true data says. And so we tested it for 6 months before we really got out there and said, okay, we're going to start drilling a target. And it has worked. It is an iterative process. You do have to train your AI and to know what to look for. And there's a great video we did recently with your buddy Doug Casey and the expert roundtable. And you've got Simon. I'm a finance guy, so I'm mincing the real use of AI. But Simon, our geologist, our COO of RUA Gold, he's there explaining how AI works. And he is in the weeds of doing that iteration, doing that iterative process and running the data and cleaning the data. And you're talking about a 70-plus-year-old geologist that loves this AI tool. And so mining is technically and is traditionally full of Luddites. We're not big technology adopters. But when you've got your 70-year-old geo with 40-plus years experience saying this Verify AI tool saved us a year of 20 geologists processing data, that's real value straight away. And so we essentially picked up Cumberland, our property that we're looking at now. We picked that up through the deal in November. We got permits to drill it in April, and we hit on our first 2 holes. So it's really encouraging. It's not going to do the work for you. It's not going to tell you where to place your drills and what angle to put them at, but it will help the region of your property to go to. It will rank that over another region you may be tossing up between. And it's just a good way to really push the geologists to think outside what they might traditionally have thought of if they were just doing it themselves.
Well, let's talk about your other project, Glamorgan. You recently completed the second phase of surface exploration and drill targeting there. Fill us in on that progress and how you plan to follow up.
Yeah, Glamorgan gets the geos really excited. I'll admit, like in the South Island, when you're chasing these high-grade narrow veins, the geos can get a bit scared because it takes a few drill holes. Up in Glamorgan, you're in this epithermal zone of New Zealand. You've got a district that has already produced 15 million ounces of gold. And we're just north of Oceana Gold's operation there. So Oceana Gold have the Waihi open pit, and that's been producing for 40 years. And it's done close to 10 million ounces now. Just north of it is Wharekirauponga. This is the project I mentioned. They put out a PFS last December. It's in that fast track process. It's going to be permitted and ready to construct by August this year. And so what we did from timeline perspective is we back calculated. We said if they're going to go into construction in August, that will take away any sort of naysayers of permitting risk in New Zealand, because despite all the shouting from politicians, despite all the good law changes and everything that's being done, you've always got people still worried about political risk and permitting risk and things like that. So I said, we're not going to spend any money up there outside of our surface work we've done over the last 12 months. We're not going to put a drill hole here until we know the neighbor's getting permitted. And we only have to wait till August. So we're not talking years here. And so we've done all that mapping. We've done all that soil sampling. We've even got the clay and done CSAMT analysis to really understand what we want to target. We're actually currently onboarding all of that into the Verify AI product as well, to then overlay it with the AI thought of where we should be focused and compare that to our own targets. And we're going to be ready for drilling in August, September this year. And that way, we're not going to spend a dime on it now until we've actually proven the neighbors get permitted, proven the 6-month permitting process works. And we're 3 kilometers away from their project. And that project is 1.5 million ounces of 18 gram a ton gold. Like it's open in every direction. It's a monster. I mean, and it makes sense because the mine they are just south of us again has already done 10 million ounces. It's elephant country up in Glamorgan. Epithermals are known to be these tier 1, long life, low cost operations. And when you're dealing with 18 gram gold, you're really got some good margins to work with there. So we're really excited. It's earlier stage, so I'd say for investors and for people looking for catalysts from RUA Gold, you're going to see more catalysts coming from the South Island, where we've got 2 drills turning, and we're going to have continual exploration results. But you'd only have to wait till September before you start getting the excitement out of the market in Glamorgan. And so it's an H2 story for us.
Fantastic. Well, Robert, I'll end by opening the floor to you. Is there anything we haven't yet covered, or anything you think it's important to emphasize the potential shareholders of RUA Gold should be focused on?
Yeah, I mean, outside of encouraging everyone just to have an open mind and take a look at New Zealand, I mean, Google Shane Jones, the resource minister, and watch a couple of his speeches. You're going to be amazed at how much you're wanted in New Zealand. And we had him at PDAC with us this year, co-pitching a group of investors in Toronto with us. I mean, you don't get that from many mines ministers. But the only other thing I'll leave with is in our South Island property in the Reefton district, and we could spend another whole hour talking about this, but we've got gold antimony on this property. And so there's a lot of flutter around the antimony story. Everyone's getting very excited. It's a whole discussion in itself about the world politics and China cutting off supply of antimony and US needing to secure supply. And so antimony is something really important. I don't go and promote it or pitch it, because it really is a byproduct to us. We are gold explorationists, but the antimony byproduct can't be ignored, because the spot price has gone from 10,000 to 60,000 over the last 2 years. It's an amazing economic byproduct. But not only that, we've gotten call outs and there's videos on LinkedIn of the mines minister of New Zealand calling out RUA Gold and saying, this gives New Zealand the opportunity to sit on the world stage of minerals trading, because antimony is one of the scarcest resources out there. You're never going to see a supply glut. Again, in nature with everything in New Zealand, we've got super high grade antimony. And so it's not just an economic benefit to the company, but it's actually a political benefit in terms of getting the magnifying glass on us, making sure we get this thing permitted quickly, because the government is very well incentivized to make sure the antimony gets out of Reefton and gets into the world market. And then you've got the trade relations side of things, where Japan and US are trying to work out where they're going to secure their antimony supply. Europe has been cut off from getting antimony out of the China for the last 6 or 8 months. I think they've had 1 shipment. And so there's a new push as to, from a country negotiation and relationship point of view, New Zealand want to be on that world stage and say, we can provide you antimony. And RUA Gold is the center of that, because we're sitting on New Zealand's antimony supply. And so that is the one thing that I don't harp on about too much, but investors and your subscribers may be interested in that, because it really is a true potential of our development of the Reefton district.
Great. I'm going to put a link in the description below to the RUA Gold website, as well as social media for people who want to follow along with the company. Robert, this has been an enlightening conversation. Always love chatting with you, and thanks for coming on the show.
Thanks very much, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.